South Africa is out of recession. Some positive local growth numbers this week, helping the JSE nudge a little bit higher, help the currency. There's also some optimism across global markets with the potential trade truce between China and the United States. But just how long can the calm last, and will you outlast the calm? I'm Bruce Whitfield. This is Taking Stock. We're looking back at the month that was November, and a tumultuous month it was. At least December's off to a better start. Portfolio manager at Vestact, Michael Treherne, and Rayhaan Joosub from Sentio Capital Management, wrapping up the month that was November. I mean, who wants to have November over again? Would you dare have November over again?
Well, it was better than October, so we've got to take the positives that we can here.
In November, lots of results coming out, but quite a lot of negativity in the South African environment. There was deep concern ahead of the G20 meeting last weekend that the Chinese and the Americans would butt heads, and it just makes you feel that anything that happens in South Africa is almost irrelevant to your future wealth, Michael, or not?
Yes, I mean, I think in the sense, especially in the short term, that is the case. I think for South Africans now are just focusing on the election next year. Let's get to the election, let's get policy certainty, and then hopefully we see our market rallying. But even yesterday, when GDP numbers came out at 2.2%, higher than the 1.9% expected, yes, the rand strengthened, but at the same time, the euro and the pound were doing similar things against the dollar. So it just shows you that South Africa is very much influenced by what's going on around us.
And tragically, around, I mean, we're down 15% so far on the year, and that's partly as a result of a rand which is stronger. So the rand hedges, which are carrying investment portfolios along very nicely while South Africa was in its implosion phase, those shares have sort of steadied, and then the rand hedges have pulled back. And I guess that's what's done most of the damage this year.
100%. So I mean, I think let's maybe do a bit of a recap what's happened this year. You've mentioned the rand weaker a little bit and stronger towards the back end of the year. The bulk of the weakness probably was EM assets selling off. You know, you had EM assets struggling from emerging market growth, looking poor because of many things. Fed's hiking, obviously interest rates going up in the US, strong dollar, weak emerging market currencies as a result of that. You've had trade wars, crazy trade wars throughout the year, which is obviously bad for EM, particularly for EM because they're exporters into the global economies. And you've had the rising oil price, and most EMs import oil. So all of these factors have really, and South Africa, obviously our own specific issues, political issues, poor growth, parastatals in trouble, add all of that together, no wonder our markets were down 15%. I'd take a bit of a positive spin. I think, you know, we'd like to think November was the bottom, and the nadir for markets for South Africa in particular. You know, we want to take a positive view, and we'll talk more about it throughout the show. But we think that the valuations are looking more attractive. We saw the GDP number looking positive. We think the base for the economy is now low. Consumers going to recover, we think, with lower oil prices as well.
I mean, this feels like it's the end of 2017 and not the end of 2018, where we were coming to the end of the Zuma administration and 2018 was going to be so much better. Except it's been harder. 2018 has been considerably harder than 2017, just as noisy, just as uncertain, just as difficult politically, economically. First 2 quarters of the year in contraction. Is November the bottom, Michael? Can you be as confident?
Oh, well, let's hope so. But I think
hope is not a strategy. Hope is not an investment.
Hope it gets me through to Christmas, Bruce. But I think our economy goes sideways until at least trade war sorted out. Trump's come out and said 90 days or else. Brexit uncertainty happening. Politicians behaving badly in South America. At least that's now been resolved. And then locally, we've got our elections in the middle of next year. All these things are long-term uncertainties that need to be resolved before investors say, we're going to put money back in.
Here's the only thing that is certain about investment markets, and you can go through any period in history, is that, I mean, people talk, and it's the thing I hate more than anything else. You go to any conference, which I know you don't do at Vestact. They don't go to conferences because they're very hard workers.
We manage our clients' money. We focus on the money instead of the conferences.
But you go to conferences, and some speaker will stand up and say, "We live in a VUCA world." That's V-U-C-A, volatile, uncertain, complex and ambiguous. And you want to get up on the stage and punch them in the mouth and say to them, the world has always been volatile, it's always been uncertain, it's always been complex, it has always been ambiguous. That's the world we live in. No sooner do we resolve policy uncertainty and elections, and there'll be other uncertainties Can we not just run markets on valuation?
Absolutely. I mean, we're also tired of investment conferences. Every conference we've gone to this year is just negativity, negativity, negativity. We're putting that aside. We fund managers. We take a long-term view. We need to invest for our clients on a long-term basis, and we explain that to our clients. They don't always understand that, but we have to do that ourselves.
Okay, so people say you must be in markets for at least 5 years to make money. So if I put 10,000 Rand on the JSE All-Share Index 5 years ago, I would have what today?
Probably 20%, 30%.
I would have 12,300 Rand today as a result of 5 years on the JSE. I would have made more putting money into an interest-bearing account at 7.5%. I'd have about 14,000
At least you would have
Rand.
beaten inflation then, Bruce.
I would have beaten inflation and I would have beaten the market.
Yes.
And that's the trouble with investment markets, is they can be blimmin' negative for a very long time. So long term, and what did John Maynard Keynes say? In the long term, we're all dead.
We're all dead.
Yes.
Yep, absolutely. But interesting opportunities now. I mean, if the market's underperformed for 5 years, it tells you valuations are cheap. The Aussie, if you just strip out Naspers, because that's the difficult one from a valuation perspective, you just strip out all of that excess valuation from Naspers, the Aussie sitting at about a 13, 14 PE. That's as cheap as it's been for a very long time. It's only the financial crisis that it was actually cheaper. And the opportunities are there. We think the earnings growth is going to be reasonable. We're not overly bullish on the economy. We think the economy's bottomed. We think there's reasonable growth ahead. We think there's reasonable earnings growth as a result of that. And from these valuation points, you tend, on historical backtesting, you tend to make more money buying at these market levels than buying maybe 5 years ago.
And it's precisely at points like this where people lose faith. I've got more and more people coming to me and saying, you know, we've watched you on TV, we've listened on the radio, we read the stuff that you write, and you keep talking about investing for the long term. We're fed up now. I said, this is exactly the point where people make the biggest mistakes of their life.
Yeah, when people are most bearish, there is the most opportunities. But I want to come back to your 5-year point where if you had 10,000 Rand, what would it be today? I think you're missing the point that you need to be investing monthly or quarterly or at least annually. And there's this beautiful thing called dollar cost averaging, where you just put money away every month, and when the market's down, you end up buying more shares than you would have when it was up. And even
you actually should celebrate declines in markets because they do provide opportunities. So you're not retiring next week.
Assuming you're not retiring, it's a great strategy. And even when a market's flat, if you do dollar cost averaging, you've actually up over 5 years because you've been buying all the extras in the dips. So I mean, tax-free savings, great example. You put money away every month. You buy regardless of what happens. I've still got a good another 30 years in the tank. I don't mind what the market's doing now, and if anything, like you say, let it be down so I can buy more shares.
The youth of today, they push markets down. That's what they do. More market movers, more shakers, more stories about the year that has been 2018. And these guys both talk about valuations being quite compelling. At some point in the next 20 minutes or so, we will look ahead to the year that is 2019 and see whether or not it is worth adding and topping up your RA, or topping up those tax-free savings accounts, or even opening up your own stockbroking account. It's not nearly as scary as it seems. This is Taking Stock on ENCA.